The jobs numbers were revised lower. Are you surprised? I know I am not. In today's video, we are going to look at what this means for you. You came here for the truth, so let me unveil that for you. My name is David Quintieri. I'm the Money GPS, and I'm the guy who predicted the exact bottom of the stock market in 2022, as well as many other things over the years. You're looking at what will happen as a result of this data that's coming through right here, right now. I wanted to begin by looking at weak private payrolls data for August. Yes, that's right. You probably saw this. Right after that, we get the jobs numbers. Unemployment ticked up to 4.3%. These things start stacking on like blocks of Lego, all right? And then we had the revising of the employed people. Think about this, okay? They give us these numbers and they say, okay, 200,000 jobs were created, 22,000 jobs were created, whatever the number is. And then when nobody's paying attention, they go back and they revise them. This is not new. This has always happened. How does this work? Well, let me explain it really quickly, okay? The numbers that we get, they're not actually how many people are employed. They're not the real number ever. What they do is they do samples, because to count each and every person, that would be a big problem. So they take it from a sample and then they extrapolate that. And that's the way that they come to the conclusion of, how many jobs are created. Now, the same thing with all the other data that they pull. It's just too expensive. It takes too much time. They got to do these things every month. And so this is the way they do it. But unfortunately, that tends to be really wrong, and wrong at the right time, if you know what I'm saying. So just pay close attention to what it means to you. It doesn't matter if it was 22,000 jobs or 200,000 jobs or 2 million jobs. Really, it doesn't matter unless it's directly impacting you. And I'll tell you why it is. Look here. Feds Williams sees gradual rate cuts, but let data drive when they'll happen. You see, if you have a problem, you can always make sure to create that solution. It's waiting right there for you. Cutting rates could be that solution. I mean, what do they want to do? They want to devalue the currency, and they need to cut interest rates. To do that, the US dollar has been super strong, right? As somebody who earns US dollar and doesn't live in the United States, I can tell you it's a good thing when that US dollar is nice and strong. It's an easy bonus. However, when we talk about, which we'll get into in a moment, tariffs and other countries, everything suddenly becomes more expensive. The exchange is suddenly tossing you around, and it's a problem. Okay, it's a problem for many businesses and individuals. This is from the Fed Watch tool. So this is from the CME group. And basically, this is a prediction, an accurate prediction of when the Federal Reserve is going to cut, how much, are they going to raise interest rates, all that stuff. And you could see the probabilities, and it happens to be very accurate. So I was paying attention to this, and leading into the September 17th meeting, there is this undeniable probability of a Fed rate cut. Some have said they're going to cut 25 basis points, 0.25%. In fact, the vast majority have. And some are saying if the jobs numbers are really bad, well, then that gives the Federal Reserve an excuse to start with a jumbo cut. If you see those words jumbo, that means more than 25 basis points. So keep an eye out for that. And of course, I'll cover it all in detail. And you could see here that people, businesses, everybody is dealing with increased costs. So here we go. There's no assurance that we will be able to pass on any cost increases in full or at all to our customers. And we will lose customers in countries such as Canada due to the anti-American sentiment, any of which could materially affect our revenue, gross margin, and results of the operations. This is something that's coming from different countries that we're seeing, okay? It's not just Canada or whatever, But of course, when you've got a strong US dollar and then you apply tariffs for these other countries, it's a double whammy. It just becomes so expensive. So what do? You start shopping around. That's a fact. And that has an impact on the prices of certain things. I'll show you in a second. What about lumber? Hint, okay? Stick with me, okay? We're going to talk about lumber. The bills are sudden and jarring. $1,400 for a computer part from Germany, $620 for an aluminum case from Sweden, and $1,041 for handbags from Spain. They're talking about surprise charges. And this is, of course, we had the exemption, the de minimis, no longer the case. We don't know what's going to happen. This thing's, moving through courts and all that kind of stuff. All I know is that people are paying more. If they have to pay more, you might say, too bad, you didn't need that. But understand, paying more means less disposable income, less money moving through the economy. That's the big deal. Aging homes are crumbling across the US. Should the government pay to fix them? Oh my goodness. What do we know about individuals is that they don't have the disposable income in order to do this, and they just let their homes get worse condition. Maybe if the roof is leaking, they have to fix it, but they just do a quick little band-aid fix instead of repairing the whole thing. If there are people that are not doing those renovations, that means less commodities are required. That means less handymen are required. One by one, all of these things will have that domino effect. And of course, one of those things is lumber. Lumber prices are flashing a warning sign for the US economy. Wood prices are sliding and mills are cutting back because of the uncertainty over tariffs and a building slump. I understand, of course, what's happening with real estate is that there are a lot of homes on the market. A lot of them, if you look at condo starts, for just as an example, condo starts in Toronto, I believe it was, you just see it going down and down and down and down and down because they're, what are they doing? Okay, interest rates are too high for us. We're not getting 0% anymore. We don't have as many people that are just buying and flipping and all this nonsense. Okay, that has an impact. And of course, the same kind of thing is happening everywhere. A lot of different cities in the US and Canada, look at Florida, they're starting to turn around. Prices are declining from their peak. I want to make something very clear though. When you look at a lot of those guys that are getting the clicks, they get the likes, understand that when there's like this unusual moment, like this super peak, you can't from that peak, we're down. I mean, come on. You have to look at more trends. You got to round out things. That's really, they shouldn't be doing that. But hey, that gets the clicks and the likes and stuff. So, you can enjoy that if you'd like. But what do you do? As an individual, what do you do? Okay, so there's tariffs. So what am I going to do here? Look, jobs right now are in the near future disrupted by AI. It could be because, programmers or whatever. It could be, though, back office workers. And back office work, it might be tedious. It might not be the best thing in the world. But hey, it can pay some bills, right? You're in an office setting. They're making money. It was reliable. You got good pay, all these different things. Good enough pay in for many people in these big financial companies. The company is like half stacked with these type of workers. So think about however many employees they have, half of them are kind of this type of worker. And AI could absolutely be disrupting that very soon. These companies operate slower than technology. So they're going to take a long time to get on it. But what I believe people should start to understand how they are going to adapt in this world. So first of all, put your frame. I can't do that for you. I don't know what your positions are. If you were on the Finance Friday, we could talk, or the Business Sunday. But understand this. You have to start getting wise to it. Okay? Don't just sit there, watching the video. Yeah, you can be on here and you could support me by giving me a thumbs up. Yes, I get it. That's awesome. I would love that. But what's more important is that you get your stuff together. Okay? I would love to be able to help you. This is basically talking about the retirement. People are not ready for retirement. A lot of people, they give their money to a financial advisor. That financial advisor doesn't know what the heck is going on. Trust me, I know some, and they really don't know anything. Okay. And I've tested them. I promise you. Asset allocation and ETFs as part of the all-weather portfolio. You might have heard of this before. I really like this, and I think people should start here. If they have an investment, 401k, retirement account, RRSP, supers, wherever you are around the world, I've got subscribers from everywhere. Learn about the all-weather portfolio. I'm going to break this down as to how to build a proper portfolio. I'm going to do probably a mini series, maybe like a 3-part mini series coming up soon. And we're going to look at the all-weather portfolio. If you're not aware of it, Ray Dalio has talked about this before, but sort of, the general term is called risk parity. Risk parity. And just understand this at a basic level, and I assure you, you're going to be much better off. There's a reason why you need to have risk parity, and I'll break it down in that series, but this is the place to start, okay? So just go to a search engine, type in all-weather portfolio, you'll see it for yourself, but we're going to have a breakdown, a full lesson all about this so that you can design your own. Even if you have a little bit of money, you can still make it, as they say, all-weather. When there's going to be different seasons. There's going to be some hard times, there's going to be good times, and you want to take part in all of that. Okay? At the same time, we have to position ourselves properly. So you have, your investments, you may have a business, or you don't. You can have a side hustle, and you can have a second job. Many people have this skill, and this skill that people will pay a lot of money for. I assure you, a lot of money for. My goodness, look at what landscapers can charge for their work, because people are saying, I'm not going to go out there and dig. I'm not going to go out there and do that. I'm not going to lift heavy stones and put it over there. If you're good with that, my goodness, people will pay. People will pay for all kinds of stuff. You have to go to the more affluent areas, maybe, but they will pay. And you got to know what your market is. We could talk about how to research that. But I want to thank you for being here. If you are interested in getting like this small group of people together where we can talk about things like the Finance Friday, breaking down things for 2 hours on a Friday. All right. We had new joiners coming in on the Friday, on the Sunday. I want to thank you for being one of those. My group out there, I really appreciate that. If you want to try it out just one time, definitely send me an email, david@themoneygps, for either the Friday or the Sunday. Just let me know. You're good to go. If you want to support the channel, hit that thumbs up button, and I'll see you next time. Take care.